the biggest problem you've got in crypto, let's forget about the technology just for one moment, before we start going into the blockchain and possibly why it's not, as fast as it could be. Nobody knows, no one on the street, if you go up to them and go, how much is 10 Doge? Nobody knows. How much is 10 Solana? They only know if it goes up or down, if they actually understand the currency. But nobody knows, the exchange rate today between Doge and Solana is X. No, it's just has no logical compatibility to our actual world that we live in.
This podcast is sponsored by Pragmatic Solutions, the player account management platform chosen by today's smart betting and gaming operators. Don't let technical constraints delay you from achieving your business goals. Expand your business, boost your margins, and dominate the market in any leading regulated jurisdiction with our powerful, flexible, and secure iGaming platform. Enjoy its extensive marketing tools, compliance protection, real-time data, and a wide portfolio of over 1,000 industry providers. It's time to upgrade your technology. Let Pragmatic Solutions show you the modern approach. Visit pragmatic.solutions and join the smart thinkers.
This podcast is brought to you by Pragmatic Play, a leading game developer providing player favorites to the most successful brands across the industry. With an award-winning multi-product portfolio of slots, live casino, bingo, virtual sports, and more, Pragmatic Play is powering up new possibilities of play through one single API. Visit pragmaticplay.com and discover your favorite every time.
Bingo, bango, bongo. Jake Dovey, CEO, founder of PayModum. How's it going, man? Good to have you in the studio.
Yeah, it's great to be with you and enjoying the experience already so far. We've had some off-camera discussions already, so we're quite warmed up.
Yeah, we've been sitting here for 30, 45 minutes chatting now. And Jake, I must say you look impeccable in your Manchester, very well-ironed suit and shirt. I appreciate the effort coming into the studio here today, so you should have some credit for that too.
Okay, thank you.
Brilliant, Jake. So we've known each other for a while now, of course, and you came to me with a really interesting proposition to do an episode, and I'm really glad that we're here today. Of course, you are Jake, an expert in the payment space, of course, as the CEO and founder of PayModum. You have background at Trustly, of course, and this is your space. And for me, what is really interesting in the payment space is that every time there is an innovation in the space of payments, the world changes, right? It is really one of those spaces where any form of innovation will have such a big impact on any human being in the world, more or less. So today what we're going to talk about is just this, that why payments and innovation are not always linked, and why they should be. So like innovation in the payment space. So my first question to you, Jake, is can you just summarize a bit innovation in the payment space as you see it today? How do you think about innovation in payments?
Yeah, so innovation in payment today has been quite a jagged process. If you probably were to, draw something on the graph, it would go up and down and up and down. Where you tend to see the most innovation in payment is not really the way that most people think about payment. Most people think about payment is it comes internally from a Visa and a MasterCard or a Trustly or, one of these other payments companies. Where we actually see the most innovation in payment is coupled with a number of technological advances. One of the best examples that I like to give on this is that if you think about contactless payment, and more broadly, on more of a granular level, if you think about Apple Pay and how that's changed our day-to-day lives in terms of how we pay for things, both online and in store, with Apple Pay, that really could have only come about with the iPhone itself. So when the iPhone was obviously, became popularized in sort of 2012, 2013, it was a coupling and bringing together of lots of different pieces of technology, not necessarily the underlying payment technology. So the technology that came together when the iPhone, Apple Pay was incepted or came into being, which is actually a technology back from the 90s, which is probably quite hard for some people to even, grasp with. And it was actually first introduced as a payment option back in 1997 with Mobile, Mobile Esso, depending on the brand, depending on where you live, they're obviously a petrol station. So it was a paid card that you could use and actually contactlessly pay. So instead of waiting for somebody or, remembering a passcode, a digit, whatever it is to make that payment possible, that was obviously a very granular space. In 2004, Sony were actually the ones that first payment together in their phone, which, again, nobody knows this story. So, again, it wasn't quite ready then yet because there wasn't that ability back in 2004 to really couple everything together digitally. You didn't have the cloud, and you certainly didn't have, the 3G, 4G technology that really become popularized by the time that Apple came around. So at every single one of these points, it actually requires far more than just an underlying technology in order to advance things. Certainly with this example that we're going through at the moment. And anyway, so when you see real innovation, the things that, are 10x things where, you, Pierre, will tell your friends about or anyone will start doing on a day-to-day basis, those real 10x ideas are using a coupling together of all of that technology as opposed to sort of an underlying technology. So I'm always going against the grain here in saying these things, but those big jumps really have generally taken place when there's been a coupling together of technology. There are other examples as well. If you go back to more recently, 2019, from your home country in Sweden, there's obviously a very big company. Hopefully they're going to list this year because I think that will be good commentary for all of us payments guys. Klarna came into the space and were around forever. Or not forever, that's probably not correct, but were around for a long time. But it wasn't until they really found certain businesses where they had that 10x explosion. And one of those sort of 10x experiences that they were able to generate and create was alongside the stationary bike company. I'm trying to remember the name of it. What's the stationary bike called?
The stationary bike.
The bike. They're a super popular one.
That you stand up with.
Yeah.
I know which ones.
It's not Zwift. That's what all the real cycling nuts do. But the other one. But anyway, they coupled together this technology and really, a product like that always had to be financed if you couldn't pay the upfront 2, 3, 4, 5,000 euros, whatever it was up front. But it was kind of like a marriage made in heaven. And so in 2019 or around this period, don't quote me on this, when they sort of coupled together that sort of technology and were able to break down that transaction in split transactions and split payments and be able to give somebody almost immediate access to credit rather than them having to go to a bank or go through a very tedious process of a manual bank check for a typical financing application. They had sort of married those two things together. So that was sort of Klarna marrying themselves to really a technology and a financing area specifically. So much so that became, I think, 30-40% of their revenue at the time before it really sort of catapulted themselves into, other brands trying to copycat and go into that space. And there's plenty of examples of those 10x scenarios that start to take place, but they'll find and take place in one environment, and then somebody else will sort of move in, and then it gets everybody talking about it. Oh, I had this amazing experience the other day. I have my own experiences with it as well. So, in 2015 it was, HSBC in the UK were the first bank to have Apple Pay. So when you were adding your card to your phone back then, you would scan it and then manually enter in all of the information, and then you would have to call the bank to add it, which obviously most people, now they're like, what? Speak to a real person. And you would add it into the phone. And, at the time it was like, okay, this is an interesting experience. Finally got it added. I walked into a corner store to go and purchase, I don't know, packet of crisps, whatever it was. And I went to pay with my phone, and the guy stopped me. He goes, "What are you doing?" Because he assumed it was some sort of scam, something had taken place, because he'd never seen this sort of technology. He had a contactless terminal, but he'd never seen this technology before. So he actually stopped me before I left the shop because he thought this was a scam. This is back. It was only in 2015 as well. So, goes to show, how quickly things have sort of changed since this moment. And yeah, it wasn't until you sort of had those sort of inception points where then the tube started to accept sort of contactless, via your phone. And now you look at the tube and probably 70, 80, 90% of everybody, if they're a Londoner or somebody like that, will always tap, using their phone because it's just completely ubiquitous. Yeah. But at the time, that was something totally new. But that was that 10x moment. Wait a minute, I don't need a card anymore. I can put this into my phone and carry it around with me and use it to pay for things. Yeah.
Yeah, it's interesting what you say. So oftentimes the technology will be there, but not adopted until there is this technological change that will allow this particular technology to really take off. And I mean, there's plenty examples of outside of the payment space, let's say taxis, for example, where you would call and book a taxi or you would hail a taxi on the street. But it wasn't until the iPhone came around where you could actually then book the taxi then and there from an app, an Uber, and it would come to you, and all of a sudden the taxi landscape 10x'd overnight. And you talk about NFC, for example, where the technology was available from the 90s, but it wasn't until later on when the technology actually took off. But can you talk a little bit more to that? Why is it, do you think, in the example of NFC, for example, that the technology took so long time to be adopted when it's so obvious that it's a superior technology to a chip technology where you have to put the card into the machine and so on? Why did it take so long time for it to be adopted?
Yeah, so this almost goes back to there's actually quite a few things that go hand in hand with this. There's firstly the most important thing is if adoption doesn't take place, is the platform that's supporting it, or is the environment that technology is in, how can it support it? If we're thinking about a physical world, but we can also translate this to the online world as well. And, the brands that we talk about that are fast to adopt payment or a new method or type of transactional payment generally are the ones that experience that 10x moment because they're coupling that together with their great technology, alongside this new way or new method of making payment, which is really sort of generating that incredible sort of rise to fame, if you like. But if we go back as to why things take so much time to adopt it, if we go back to my original example, we had to wait for 3G. And let's be honest, guys, 3G wasn't that great. The photos loading, still loading. Maybe it's here now. 4G was, oh, wow. Yeah. The photo took a couple of seconds. 5G, we don't even think about it. And we're so it takes a huge amount of time for that technology surrounding that actually embedded technology to then rise to fame. There's better examples than that as sort of QR code as well. QR codes, crazy. They've been around.
It was there forever. Yeah.
Then NFC. Yeah. And now we go, why don't they have a QR code?
Yeah.
If you've got a great advert on, a bus, a tube, whatever it's going to be. Why don't you have a QR code? But that's only really become obvious to everybody in the last 5 years because, again, we've got a supercomputer in our pocket that can take a photo, immediately link you somewhere because of the instant internet access you get. Whereas, the reason why QR probably didn't take off, let's say 15 years ago, is because my BlackBerry, or actually that sounds rather advanced, maybe 20 years ago, my Sony camera, how are you going to scan the QR? How are you going to interact with it?
You need to upload it on a website, exactly. And then the website will read the QR code, and it's just a mess.
Yeah, I think the one area where QR was incredibly successful was, and maybe I'm wrong with this, I think Amazon and certainly some of the earlier e-commerce sites were some of the first businesses to really take advantage of QR, because, you know, for them it's about inventory management and about shipping and getting product out the door in the most efficient, effective, and the cheapest way possible. And instead of having sort of names for things and identifying things through sort of lines of digits, if you can scan something and it's going to give you an instant answer to something, that's a far better way of tracking an item or seeing an item compared to, you know, other technology, shall we say.
Yeah.
So there have been sort of those points where it's been popular elsewhere, but only becomes popularized in another way, you know, or in another space. I wanted to save this for later, but crypto is probably like the perfect example of this.
Yeah, I was going to jump into this also. I'm curious to know. So, like, on that note, I want to just lead with this. So, you know, I'm old enough to remember when the crypto boom started, and the premise at that time, you know, in the 2013, 2014, was that eventually all payments in the entire world will be done via crypto, because it is much cheaper and is borderless, let's say. I think now like moving forward now into 2024, it seems like the premise is changing more to crypto, or particularly Bitcoin, being a storehold of wealth more. The network is slow, it becomes more expensive when more people transact on it, and so on and so forth. So I want to, so in the last 10 years, the space have trying to find its space and its use as this new mode of transaction. So I'm keen to understand a little bit better from your perspective. How do you think crypto is changing payments until today, perhaps? And what is, in your opinion, the promise of the future as it comes to crypto? Or do you think this is actually something that will change the world?
Yeah, I was thinking about this on the taxi on the way over. Again today, the biggest problem you've got in crypto, let's forget about the technology just for one moment, you know, before we start going into the blockchain and possibly why it's not, you know, as fast as it could be. You know, nobody knows, no one on the street, if you go up to them and go, how much is 10 Doge? Nobody knows. How much is 10 Solana? They only know if it goes up or down, if they actually understand the currency. But nobody knows, you know, the exchange rate today between Doge and Solana is X.
No.
It's just has no logical compatibility to our actual world that we live in. So with all of these cryptocurrencies that are Bitcoin, you know, 100,000 US dollars. You know, have you seen what that looks like on the screen when you go to pay for something? It's point, and then you're sort of falling asleep by the time you actually get to the decimal point of the value of the transaction. So it's just, nobody's ever going to remember this, right? You know, us as humans, it just doesn't fit with our world. So we can't fit into that. Where crypto is changing, and, you know, you've seen this recently. Certainly if you see Stripe, they acquired Bridge, which is a fairly major move, and also has a lot to do with, I think, the incoming president of the United States is certainly far more favorable to cryptocurrency than some of his predecessors, and you know, other parts of Europe, etc. You know, this sort of movement now actually is more towards stablecoin, because you know what $1 US is, you know, or $10 US, it's $10 US. So the biggest problem in crypto has always been, okay, you know, how much is it? How ubiquitous is it, you know, is it to then make that transaction? The making of the transaction in crypto as well is also not quite there. There needs to be more, I think, focus on, you know, if we could have a blockchain that could simplify really that capturing of the information in a lot better way, you know, securely, maybe not just through a line of digits from one wallet to another, that there needs to be a better sort of interface, in my personal opinion, for that to you know, increase its overall sort of market share. And also there needs to be more of a standardization. So a lot of people in crypto, the biggest sort of problem they've had is that, you know, we're on the island of Malta today. They have put in place a framework, a pretty good framework as well. Certainly, you know, one of the highest standards across all of Europe. But if you go into the US, state by state, it's totally different as to what the rules, regulations, whether or not I can actually go and purchase, crypto with my bank card. There's all of these sort of things where there are sort of blocks in place, so there's no standardization to this until we come to a place where it's pretty clear on what the rules and regulations are on cryptocurrency. It's clear on sort of, the trust as well, because in financial services, the unspoken word is trust. And without it, unfortunately, we still have the headlines, FTX, Sam Bankman-Fried, why you would want to trust all of your money with a 27-year-old curly-haired guy that doesn't shower. It's all, a little bit odd, right? So there's so much more that needs to be done. But at the same time, there is so much there for it to be great. There's a lot of sort of, there used to be sort of one or two voices in that space. Crypto's great, XYZ. Crypto's bad, XYZ. Now there's 3 or 4 voices in the space, rather than just having right and wrong, and a different approach to it. And there are different shades to it now in terms of law and regulation. So it has taken that step forward. There's no doubt in my mind, though. We were talking about 10x earlier. Great example of 10x is Stake and YOLO. They are probably the perfect and prime examples of early adoption, creating a fantastic experience, which has really been, generated both internally and externally. So they're on that axis between technology, early adoption, and that whole forethought and process, really, of making that fantastic experience for us all in the gaming space. And these guys have been the real beneficiaries of that. And they've been able to create and now build brands whereby they have the much higher transacting, customer or player, because again, they've built in then that trust. It's become far more ubiquitous for one of their customers to go and do something, which has created that boom for some of these, businesses that have been able to adopt it, that have been able to implement it. And then you've obviously had everybody else that's followed. Okay, great. I remember, Craig, I shouldn't say this, Tim's company was in my lead list in 2018 at Trustly.
I was going to ask you.
I didn't even contact them. Can I sell them Trustly? What? No. I didn't even reach out. Sorry, Nick. But, it was, there's been, those sorts of, changes that have taken place. And, it's, we probably need to get back on track now. But, the innovation of crypto for my money, there's a lot more to come. But we were talking about time. It takes forever.
Yeah. And what's holding back the crypto space for the most part, I suppose, is regulation. To some extent,
it's not regulation. It like there are plenty of things that are unregulated that work really well. Facebook. Most of the monopolies in the world that we know today are very likely regulated. Something doesn't need to be regulated for everybody to understand it. And before everybody jumps on me and says, Jake, that sounds very, very high risk. You're dealing with other people's money. Trust has to first come from the industry itself. And unfortunately, there's been too many bad actors. But then there's also not been clear enough steps to sort of standardize amongst everybody else. In payment, where we have fantastic standardization of things, are really where you have monopolies at play. And there hasn't really been that monopolization effect that has taken place in crypto yet.
So you're saying that, for example, if you have a monopoly in a particular industry, they are the ones that set the standard. Let's say
they can set a standard,
just like Apple, for example.
100%.
When Apple decides that USB-C is going to be the standard, or that NFC is going to be the standard, that's what happens, essentially. That's what you're saying.
Absolutely. Well, in payment, it links back to sort of what I was saying earlier about trust. So Visa and MasterCard, I'm not going to say the M word because we're currently trying to work with MasterCard, so we've got to be pretty careful. But with with these guys, they've obviously gone and spoken to all of the banks and said, hey, look, issue our card. You can do X, Y, and Z with it. And there had to be a coming together, really, of all of those financial institutions to be able to accept the card in order to put the payment in front of people. The in-country bank schemes, and we can take this, you can look at nearly any payment scheme, and the real popular, successful ones, PIX in Brazil, which is obviously, Brazil is big news at the moment with a new regulation there. PIX in Brazil has standardized basically a payment system with all of the banks via the central government. The standardization that you have in your home country in Sweden with Swish is the coming together of really 5 financial institutions, which are the major banks, and it's 99% of the bank population, whereas we don't have that in crypto. At the moment, we have exchanges here, we have exchanges there, we have licenses here, we have licenses there. There hasn't necessarily been a coming together. Where there has been a coming together and where we are starting to now see progress, even though there are sort of 2 competing factions in sort of the stablecoin space, USDT and certainly USDC have been able to, okay, great, let's base this on something that everybody understands, which is the US dollar. It's the world's currency still. And then let's link that to, obviously, this blockchain technology. And, let's guarantee then on those funds, and charge a gas fee for it. So we are starting to see, and those 2 primary options that I've just mentioned, if you actually look at traded volume, something that's not being done, artificially, actual in the real world, transactions taking place, those are the 2 ones that are succeeding. Those are the 2 ones that people are actually using to pay each other. Those are the actual currencies that people are using. Because they've said, okay, cool, we need to standardize this. We need to have this based on a technology, and it needs to be something that everybody understands, which is obviously the US dollar. So we're starting to see that. But if you go across any payment, if you're sort of missing that coming together, it's very hard to get things done.
So to wrap up the kind of space of crypto, where do you see the space in, let's say, a couple of years' time as it pertains to real world use? Do you think that fiat is still where most people will live, so to say, or does this need to happen that the major players within the crypto space need to come together for us to be more comfortable moving our monetary values, let's say, more into the crypto space and actually start to do commerce within that space?
Yeah, I'm pretty optimistic, pretty bullish on the overall sentiment of it moving forward. Versus fiat. Yeah, versus fiat, we haven't addressed the other monopoly in the room, which is, the respective governments of the world, right, who own a monopoly on their citizens to charge taxes and everything else that they provide. And with a scenario versus fiat, I think you will probably still see fiat. However, what you will have is really that coupling together with fiat, in the case of the stablecoin. I'm sure at some stage there will be something that can become ubiquitous. There's been a lot of people out there that have tried to link cryptocurrency, as an example, to gold, which is obviously a physical, known asset, been trusted for thousands of years for its qualities of, perceived value, wealth, great conductor of electricity, it looks great, all of these different things as to why we value it. So I think there will be still that coupling together with fiat, but it's going to go alongside the blockchain. So the Web3, Web4 guys, etc. Don't worry, it is taking place. It is happening. I think it's going to move a lot faster probably than it has done in the last 5 years. You'll probably see more change in the space over the next 1 to 2 years than you have done over the last 5 years. I'm
a big fan of Ray Dalio. I don't know if you read the Bridgepoint Principles, and he has a couple of other books that are just absolutely amazing. But in one of his books that's called The Changing World Order, he encourages people to take a helicopter view of the world, and we are used to thinking about the world in kind of 10-year cycles and boom and bust cycles of the economy. But Ray Dalio says we should zoom out even further and think about the 100-year cycle. And what he talks about is like in our lifetime, we've never experienced the falling of an empire, for example. Like the Second World War was the kind of outcome of that was that we moved from the British Empire into the American Empire, and the world as we know it today is based on the American Empire that basically started from the Second World War. And one of the things he talks about is in fairly stable times, like we've all we've ever known is like fairly stable times. We are living in an age where kind of we are less restrictive by our governments to move money or transact money or change currencies and stuff like that. But in times of crisis, one of the first thing that happens is that the nation becomes very protective over its assets. So in a very unstable time in a particular country, the country wants to preserve and protect its currency. So you want to kind of avoid a run on the bank where, let's say I'm Swedish and we would have a big crisis in Sweden. We want to avoid me going to the bank and depositing my Swedish kroners and transacting them into dollar or transacting them into gold or any other currency, because that will cause a crash essentially, right? So the government will impose strict restrictions that are against the democratic freedoms that we are used to, let's say. And something very contradictory is happening right now in the United States, which is that the US dollar is the world's reserve currency. And this is a huge advantage that the United States has, because it means that they can print dollars without the inflationary effects being as bad as they would have been if the entire world didn't transact in US dollar. So if the global US dollar supply is, I don't know, let's say 20 trillion, or I don't know what it could be, but much of that capital is owned from entities outside of the United States. So when you print money, the inflationary effects will not be as great, let's say. So you can basically create revenues by printing more dollars. So they can weaponize the fact that they have currently they enjoy the world's reserve currency. However, the contradictory thing that happens in the US now is that the incoming president, Donald Trump, is very crypto friendly. Yes, and so he is backed by the tech bros of the US who are pushing for crypto harmonization and legalization and so on and so forth. And the thing is that if more people transact in Bitcoin or other cryptocurrencies that is outside of the US dollar, then crypto becomes a threat to the US dollar as the global reserve currency. Because the fact of the matter today, if we look at the biggest global reserve currencies, is number one is US dollar, number two is euro, and number three is gold.
Yeah.
Yes.
And the current trend is to add further to that. If we look at both central banks around the world, there is now much more of a movement to gold. Yes. You know, those of you that check your stock portfolio often, who are hedged out in any sort of way in gold, would have seen that in their portfolio over the last 2 years. Yeah. The real movement, though, I think what you were sort of getting to is that, this almost heavy reliance that the US has on the printing press.
Yes.
With the 36 trillion that it carries in debt. As a ratio to GDP, they're not actually number one. That's my home country. Actually, no, that's Japan.
Japan, that's And then Japanese. I didn't know.
Yeah, and then myself, and then I think it's the French. Weirdly, who knows? Retiring at 55 was too young. Let's not get political. But people have actually stopped buying those bonds. So when the bonds get created, and Ray Dalio, who you've brought up, he's obviously a big bond guy. All of his portfolios were around bonds, and when China stops buying that bond and effectively stops taking delivery of US dollars, because that's what happens when you purchase, a bond in US dollars or a T-bill, you might hear it referred to, that gets paid out in US dollars plus interest. When they stop buying that and moving towards gold, it makes it far harder, like you said, to print money. So, this current movement of everyone enjoying pointing the finger at Donald Trump and Doge, what's going on with Elon Musk at the moment to try and cut costs, this is intrinsic to the so-called American empire. And this is the falling out between Chimerica, which is actually, if you're into reading books, Niall Ferguson coined this term, I think back in 2010. I think he's at Harvard or maybe MIT, I forget, as the historian over there. And with this falling out of Chimerica, that's kind of what we've been seeing actually play out over the last 8 years. And so the US's fiscal responsibility now comes center stage, because they know in the back of their minds, if they go to borrow more money and create more bonds via the Federal Reserve, who's going to buy them? And that then forces down, obviously, the currency. We can link this further also to crypto, and there are certain forums and parts of the internet that, again, I was talking about sort of, there are various factions now in crypto. One of the factions suggests that Donald Trump is actually very pro Bitcoin and other currencies, because he knows that when those are bought, those cryptocurrencies, generally speaking around the world, they're always going to be in US dollars. This is a very sort of psyop-y way of looking at it. And he thinks that there could be potentially sort of a movement out of the US dollar, which is going to strengthen actually the strength of the US dollar. Because if people are still using those US dollars to purchase, buy things, etc., and there's an increased amount of transactions, even if they're moving out of that, it can actually still create width and breadth in the market. Say, for example, if they did want to, create more money supply, because effectively some of that money supply has then disappeared into crypto. So there are advocates, economists, etc., in that space that are suggesting that is one of the reasons that he has actually been pro-crypto. He's a 79-year-old man who doesn't go on the internet. So let's
take it with a grain of salt.
Let's take this, but I think he understands it. And he certainly understands, the axis of power in the world today. So America's money supply.
So I think the point is still before we head back into the innovation talk here, that the more people move towards Bitcoin as their preferred mode of transacting, the less control the nation has over its economy, essentially. So, the same argument can be made to some extent over the euro. That I'm Swedish and we voted no to take the euro as our national reserve currency. And I always remember from the debates around that time, this is like 2004, where there was an argument, how do we navigate this? Should we become part of the EMU or should we continue with our Swedish krona? And one of the politicians said, imagine that we are out at sea and we are in our boat. Do we want to be able to steer the boat where we want to go, or do we want a big European Union?
Story.
Do we want the European Union to steer the boat for us? And then the reply from another politician was, well, what if there's a big storm on the sea? Yeah. Do you want to be in the small boat that you can't steer, or do you want to be in the big boat that is nice and stable? But I think the point is they're both trying to make is like, well, if we're in our own boat, we can steer our economy to where it needs to be. So if we are in a difficult time with inflation, at least we can do something about it, with being in control of our own currency. Whereas if we are a part of the EMU, we are kind of beheaded to the EMU taking those decisions for us, right? And the more we move towards crypto, the less levers we have to pull in difficult times of the economy. But then if you take another step above that, you could also say that, well, maybe that forces us to just be more fiscal responsible.
Yeah.
Right? That like if we cannot pull these levers of printing money, for example, and increasing interest rates and so on to steer inflation, then maybe we are forced to just be more fiscally responsible on a day-to-day level. And maybe that's what the world needs in these times of incredibly high lending rates, and the US paying like 20% of their entire GDP goes to paying interest.
Huge. Yeah, I don't think most people realize what's even taking place. If the US was to pay back today everything at once, every single one of its citizens, which is about 350 million, around that number, it would be over $60,000 each individual would have to pay in order to pay back that full debt. That's a year's salary for most people. That's so much money in debt that it's hard to conceive how how they're going to be able to reduce that deficit. Certainly, we're talking about rise and falls of empire. Obviously from my home country.
You'll come back. This is your chance.
No, I
the British Empire
2.0.
Take back the crown.
No, there's it's going to be probably the big fight, the big play that we will see over the next 30-40 years. Is really the monetary system. We're all in the same boat. You were talking about boats earlier, though. There are very few countries. There's Norway, there's Saudi Arabia. These huge sovereign wealth funds, countries that are not in debt. You can probably count them on one or two hands around the world. But we are pretty much all in one boat together here, which is the fiat money supply. Hence why we've seen a huge rise in the gold price. And other things over the last sort of couple of years. It's certainly going to be interesting. There's a lot of big calls that are being made, and there are a lot of big changes going on, I think, sort of politically, and this has become a front and center issue more than most people would want to admit. Because it comes down to everything. If you want to have a fantastic social welfare state, we saw France again last year. They increased the retirement age by a couple of years from 55 to 57. This is not the French government saying this is terrible, you shouldn't be able to retire. This is really, we can't afford to carry on, spending in this way. You have an aging population, which the best way to sort of combat some of this stuff actually is to probably increase population, because if you have an increased population, you're far more likely to then be able to spend, which is also, I think, probably something that's not being talked about in Europe and the US. Is, I think, one of the reasons that there has been a much larger case of immigration. I don't know how we've ended up on this topic, by the way. But if there's a much larger increase in population, you're far more likely to then increase sort of that treasury inflow of money. So even in your home country, I speak to a lot of Swedish people. There's a lot going on there with sort of immigration, etc. Same for my country, same for the US, etc. So there has been sort of that movement towards, okay, let's accept more people, because hopefully it's going to create more taxpayers. Because our own people in our own countries are having 1.92 kids. Well, exactly. I think the US
missing a hand or something on 1.92.
Yeah, so I think the US weirdly has stayed above 2. But yeah, there's if we look across Europe, I'm sure there's not. Again, probably count it on one hand.
Yeah, I think actually here in Malta, where we are now, has the lowest birth rate in the European Union. It's 1.3 or something.
That's crazy
per person. Yeah. So this is obviously a big problem ahead of us that we have in the world, this aging population and the reverse kind of aging pyramid. That instead of a pyramid of like a lot of young people and fewer older people, it becomes more a tower, and then eventually a reverse pyramid, and that's where you see then that there is a lot of or few working people that have to supply the living standards for a lot of older non-working people, and that's where the problem comes from then in the future is. But just to kind of take the innovation into this topic. So, we kind of conclude, let's say, that there are some problems ahead of ourselves in the world. If we think about this 100-year perspective, that Ray Dalio makes the argument that we are kind of at the end of the American empire now, and at the end of any empire, it's a world that is prone for conflict, and we can see kind of like the uprooting of a lot of the institutions that made the world what it is today after the Second World War to prevent wars. We are becoming kind of the global economy is seemingly moving to be less intertwined, and countries want to be more self-sufficient, and the reason for that is they want to have more trade internally, and that will generate more revenues. But the cost of that is that if the world is less intertwined economically, that kind of builds momentum for conflict, let's say, between the countries, because it's very difficult to have a war against another country if your economy is standing and falling on these relationships, let's say. But in any case, if we think forward into the future, and again, we've only ever known the world to be a safe and stable place where we have like our liberal individual rights to transact and to move money the way we want. In a more stable environment, then how do you think payments is impacted, let's say, in a world that is a bit more conflict rich, let's say?
Yeah, I mean it's great for companies such as myself who offer 250 plus payment methods, because there's in a constantly changing world, there's constant problems to fix, and there's constant sort of opportunity there to do something differently. We were talking obviously about the use of stablecoin, collecting, settling money, or paying sort of B2B types of transactions. That's obviously going to continue to be huge, continue to sort of grow. There are going to be a continued sort of shift into, and we've been seeing it for sort of years now, whereby actually a lot of these countries will put up the barriers and say, actually no, you do need a license to be here, not just as a payment company or a payment operator. We sort of have a framework in the EU which has really we take it for granted, I think, the sort of regulation that we've had here, how well sort of protected we are. You actually go into sort of most of sort of Southeast Asia, if you're a payments business there, it's very different, right? It is, you don't have to necessarily hold a license. So, there's plenty of countries still in Africa, there's no license required because there's no framework. There's not sort of a standardization there. But payment is always going to take place. So there always has to be a way of sending money to A to B. Maybe I'm getting off topic here.
No, please.
What's the original?
Yeah, but I think it's an interesting topic, just how payment differs in different parts of the world. It's interesting to hear. So would you say like Europe is probably the highest regulated territory?
Oh, crikey. There's different forms of regulation. Which sounds strange, doesn't it? Because there's sort of financial regulation, and then there's sort of the legal court of law of the country as well. And one and two are not the same things. You can have a financial framework, but if you do something wrong, you're in big trouble, and you can go to jail. Or you can have a financial framework, but the way of law that it's not falsely sort of instructed. We quite often get asked this question in payments, which annoys the hell out of merchants, because they'll get told, hey, you're high risk, or this is slightly risky, and they go, what does that mean? and they're absolutely right, because there are different shades of risk. You might be a travel business and you're risky because, what happens if your airline, stops flying, like what happened in COVID. Suddenly you then have to refund all of those tickets that you've been selling over the last 12 months. Do you have that money to hand? Is there the cash flow there? So there is so many different shades of, us in payments, whereby we have to take a sort of a look at what that person or business is doing in order to sort of break down really then the roadmap, understand that risk. And that needs to be done sort of country by country as well. You have to have an understanding, not just what's sort of as a popular payment method, that's almost taken for granted. But, what's actually, going to work, what's the risk, thinking about that cross-border element again. How am I going to collect that money? How's it going to be coming to me? And if you look at all of the financial reports of all of the big listed payments businesses, they're actually foreign exchange businesses in disguise. If you look at Adyen, 70% of their revenue actually came from cross-border. Even the schemes themselves is about 25 to 30%. Stripes is around 60%. All generated from sort of cross-border. So that cross-border element is key really to operating, a successful payments business, and, being able to offer effectively that sort of more globalistic, or entering into those markets. Yeah,
insane. And so just back to the innovation topic as well, Dick. Now as we look forward into the future, what are the innovation that you expect to take place in the next couple of years, and what are the trends that you are paying attention to at the moment?
Yeah, number one trend for me is really the political environment. I think we've already talked about it today. That shift away from globalization is one thing that we've briefly discussed, or sort of gone into the weeds a little bit. And that's going to change things from certainly a licensing point of view to the companies and the brands that want to be everywhere, which gives us payments people obviously a great opportunity to, grow something, that's, built for doing those in-country things, doing it legally, it being a lot clearer for people to be able to enter into those markets as well. Because there's nothing worse than sort of going into something, again, linking back to the start of the podcast, unless there's that trust there that runs alongside that, real ubiquitous understanding of something. So that will increase and get much better. Stablecoin, 100%, like we've brought it up. Stripe would not have paid over $1 billion for Bridge, and literally I think they had it in their checkouts within about 2 or 3 weeks. So that's certainly an area of payment that is going to improve. And thirdly, really, it's M&A. Like what we're going to see is a number of the incumbents, and when I talk about incumbents, I'm really speaking more towards sort of the traditional Visa, MasterCard acquirers. We had an explosion of growth in that space. Dare I say it, we've almost reached what I would kind of describe maybe peak payment for Visa and MasterCard in Europe. So, we're not in double-digit growth, right? Anymore for that sort of, your average Visa and MasterCard transaction. So what takes place then is there has to then be M&A, right? In order for these sort of business models to sort of work. But you also see, again, more of a movement towards sort of, other schemes, whether they're sort of in-country bank payment schemes, which will, continue to become more popular, certainly by the use of them. I think the best sort of, example of this is probably Trustly, one of the old companies I used to work for. And, they started in Sweden. They've almost been replaced in Sweden by Swish, dare I say it. Now they're in the US, and that's 60, probably 70% of their revenue. I don't know. They're not listed. Hopefully I don't get sued. So they've taken sort of innovation there, then applied it to the US market because
they know that this is the natural next step kind of thing. Yeah.
Absolutely. And it's had an explosion sort of in growth for the merchant, because in the merchant in the US, when you're getting charged 2% just in interchange and scheme fees, my wife's American. She has the most glamorous credit cards you've ever seen. They offer her lounges and this and that, and it hurts my head, right? It's like, oh wow, But when you work out, okay, wait a minute, the merchant's paying an additional, or roughly about 1.7% more than they would do in Europe to accept that card. That's how all of those MRs become possible. So somebody like Trustly can enter into that market and offer a bank payment to somebody at far higher than what we can even charge in a lot of cases for Visa and MasterCard here, as that huge sort of advantage just for the merchant. So you will start to see sort of some of those business models start to crack. There's certainly been a very, very good understanding of the payments world from Visa and MasterCard. So I don't think they're going anywhere. The list and range of products that they can offer as well, they have nearly instant payment rails in a lot of places now for moving money in and out. So they've really stepped up, their game. So there's been vast improvements, albeit sometimes sort of small. But, when I first started in this business, I remember sitting down with a very large business. I think it was, maybe I shouldn't say the name actually. They're from South Africa. We'll leave it at that. You can probably guess who they are. And when we told them we could pay out the next day, we thought we were offering them sort of a sales service. They would go, why would we want to pay somebody out next day? We want to hold on to the money for 5 to 7 days. And we've actually moved back towards this now, which is crazy to think about. We've gone and built all of these instant payment rails, all of these instant payment schemes, whereby the merchant doesn't even want them to be instant.
Oh, wow.
Yeah, crazy. So the operators now, there's actually been more of a forced movement to not pay somebody out instantly. Oh, it's a nice to have now. So we've actually had sort of innovation, which is suddenly
going the other direction instead of
taken us. Yeah, it's almost sort of taken us, full circle again, because then that, you don't know what the other data looks like until you start doing it to compare it to some other data. So these technological advances, sometimes, we learn out, about the customer, about what's best practice, and it sort of grows. So we'll continue to see these improvements, and there's going to be a huge amount of M&A and a huge number of IPOs. Like, it's almost, if you were invested into Stripe back in 2008, or was it 2010 maybe, that they were founded. I think Klarna was 2008. Imagine waiting 16 years to finally cash out. I'm sure some of the seed guys or pre-seed guys have cashed out already, but it's you're sitting on stuff now for far too long that shouldn't have got to this point. Trustly as well, dare I say?
Yeah, Trustly is also waiting for the IPO, right? There were some obstacles there at some point.
Yeah, I don't want to talk about that though.
Yeah. We're not up on that topic. The premise of today, the conversation a bit, Jake, is, payments and innovation, but the two not always being linked. So, and we started the conversation by talking about that oftentimes it is other technological advances that sets up innovation in payments. But what can payment companies themselves do to drive more innovation within the space?
Yeah, absolutely. It really comes down to great partnerships. And I think partnerships are probably not necessarily always understood. There is the customer who there is a clear product market fit for to what they are doing. So it's very transactionary. But the real sort of partnering needs to take place really from, internal teams, speaking not just to business, but finding sort of ways and in sort of inflection points whereby they can sort of get dug into, in terms of their partnership. So sometimes it's a partner within a partner sometimes, because you're going to be speaking to, say, a large online business, and they're going to come up with a pretty wacky idea. You get to hear some amazing ideas every now and then. It's actually amazing to, do what we do and, sell payments and stuff, because you get to hear, people's business ideas sometimes. So yeah, that sort of partnership needs to sort of take place really alongside then the partnering with these sort of outside technologies, these new technologies. So, we used NFC, near field communication, one earlier, that partnering and coupling between sort of two technologies. If you're in sort of payments today, nobody's really cracked micropayments. Like one of my favorite guys that I watch on the internet, a guy called Rory Sutherland. He's a marketer, but he's had the best payment, one of the best payments ideas I've heard in a while, which is when I go to Financial Times and I want to read one article, because nobody wants to sign up and spend 20 quid a month to read, a newspaper where there's 4 or 5 articles. Why can't there be something built into the browser, just a way of taking a micro transaction, a micro payment, but free from sort of those higher charges of gateway and everything else that are typically associated to processing sort of a transaction, which has been a real tough one to sort of crack and make sort of, I guess sort of financially sort of possible. So that's a coupling together. That example I've just used there, that's a coupling together between Google Chrome, being able to integrate the payment, being able to make it cost effective enough and be able to make it fast enough where it's 20, 30 seconds, because any longer, or anything longer than a minute generally, people they're just not going to do, to be able to immediately sort of access and see something. So there's plenty of sort of examples that are out there, that we in the payments industry, it's our job really to identify them, then work with our respective merchants, our respective clients, in order to really generate and create some of these experiences. So yeah, there's a lot of exciting opportunity out there. That's kind of what needs to happen. There's plenty of sort of innovation though that you see, and it comes back to sort of what we were talking about earlier, but it doesn't take off. So there's plenty of stuff that sort of PayPal has done. One of my old sales managers used to work for PayPal, and they obviously came up really with the first mobile phone point of sale. Again, probably most people have totally forgotten about it, and if anything, I think somebody else has gone and done that, arguably probably not as well. Again, don't want to say any names there, but they had come out with this technology, I think, back in 2012, 2013. So there was I remember seeing it myself when I used to live in London, and it was just basically this dongle type thing that was connected to the top of your phone, again an NFC type thing that could accept the transaction, that could accept the payment. And but sort of what brought that crashing down was because you didn't have the rest of the infrastructure around it in order to for that to sort of happen. So you didn't have any way of being able to check, who those transactions are from, what it was for, all of that legal stuff. So, it became very hard to sort of do that. Ended, that program actually got terminated. I won't say the reason why, but you can imagine it was actually misused. So there's plenty of great innovation that does take place as well, but it doesn't happen because of X, Y, and Z. Now if you were doing that device, you would probably want to have a device, as an example, that could just take your fingerprint, take your facial recognition, link it to something in the cloud, throw it into the cloud, and so you're attaching the payment to something, and then you could verify it from a legal perspective as to who it is, what it is, etc. But again, there are all of these things that sort of take place generally, and they will fail, but they may come back again. Sony's payment phone in 2004, or whatever. It's all of these things that are still happening, but you're waiting really to couple it with the real world.
Yeah, as I'm hearing you talk, Jake, a lot of the innovation we talk about today is really centered around removing friction. So, the move from having to input your credit card into a machine to NFC is really a play to make it easier and faster to just make that transaction. And similarly, you talk about microtransactions, for example. The reason we are not able to just purchase one article of the New York Times today is just not easy enough to do it right. So, do you see friction as like the main point of innovation within the payment space in general? Is that always the kind of purpose, to make it easier to transact with less hassle?
When most people think about friction, they think about it probably in the wrong way. They think about, okay, how easy is it for me to make a payment? Can I get my phone out and just tap on something? Whereas the real friction is actually generally taking place elsewhere. To have that super slick experience, of Apple Pay, they have had to then go and integrate something biometrically that's then sort of sits alongside it to verify it, to confirm it with your issuing bank when the transaction gets made, to couple that with a device in a wallet to then, send a message to the bank, confirm a transaction, etc. So, just focusing on a user experience from how it is to you as a user has to really be back engineered to how can we have these things in place to be able to remove friction, not just for the user, because you can have frictionless user experiences now for everything. Whether it's bank payment with open banking, that's getting better. I mean, there's a lot more I'd like to see there, but even crypto to a certain extent, if you've got, how to use your wallet, it's a good wallet, you can send the transaction fairly quickly. With those types of sort of experiences, they almost need to be back engineered, really, to remove the friction from the back end onwards. So Stripe's business model, it is really no different to Adyen's, to WorldPay's, to everybody else's. They're processing Visa and MasterCard. Not that sexy. But what they did differently is they back-engineered how somebody, i.e. a customer of Stripes, a merchant of Stripes, could actually start using their product. And how they back-engineered it was, how can we get somebody to sign up really quickly without that friction process, basically? How can we also not only create an onboarding experience which is as seamless as possible, where we can onboard tens of thousands, if not hundreds of thousands of people in a week, a day, whatever it is. How can we also make that experience as ubiquitous as possible, by having integrated into the places that people are actually wanting to take payment from? So that's the Shopifys of the world, Magento. I don't think it's called Magento anymore. But, it's all of these different types of sort of platform that they busily got integrated into. And, so they were removing sort of the friction that way, and therefore sort of your average Stripe user really, they're there because it was the easiest thing to do. In my own company, Masato, that's exactly what we're trying to do. So how we're sort of thinking about payment at the moment is that right now you have this huge amount of cost, specifically in the iGaming space, which is not dedicated to the payment. So, we were going to talk about cost and price, and now I'm going to tell you why things do get expensive from a payment point of view. The biggest problem is you've got a head of payments. He's a fairly expensive guy generally. To all my heads of payments out there. You've then got a payment product, you've got payment operations, you've got all of these things that add a huge amount of cost. So by the time you are, processing tens of millions, maybe even hundreds of millions as a large business, you're literally employing hundreds of people from a payment analyst perspective, etc., to sort of monitor all of these transactions. And then on the front end, the specific part that we're trying to remove, the friction that we're trying to remove, is really providing a totally code-free and really easy way to enable hundreds of payments methods, because it's very hard to scale and grow a business if constantly having to sit down, do 40 hours of integration in order to get something switched on. And then also I've got to go and employ somebody, for £100,000 or whatever they are salary wise, in order to use it. The reason why we started this business is that when I first went started the entrepreneurial, crikey, I got it out there in the end, journey to start with. I was having to do consultancy to start with, right? As I was building and growing the business. And we had a consultancy product where we had a orchestration platform. I'm somebody that's worked in payments for 8-9 years. I can tell you exactly how Visa and MasterCard work with the banks and how a bank payment is and why something does that or how it works. But I couldn't use this platform. And, even the people in the industry, struggled to use this platform. People that know everything about payment but can't really fit those two things together of making something, as enablement and as hassle-free as possible, which is what Stripe has done in the e-com space. So that's kind of what we're really sort of focused on. You're really narrowing in our sort of focus to UI, UX, and removing that friction. So friction doesn't necessarily always come from the customer side. The customer side is generally pretty good. It's that age-old thing in tech that if the experience is super frictionless, it means there's been far more development work that's gone into it to enable that sort of frictionless experience to take place. There's been an awful lot of work generally. Most people think about things, A to B, I'm only making a payment. But in order to make the most frictionless possible payment, there's so much that's had to go into taking it to that stage. It's the reason why we love Amazon.
Yeah, buy now button, right? It's like
it's
little button, and then
and Amazon's, the reason why Amazon is frictionless for taking a payment, because when you add your card to Amazon, you'll get that check, right? It will pop up on your phone or whatever. They'll pre-authorize, they'll tokenize the card, they'll go and pay and go and speak to Visa and MasterCard, check with your issuing bank. So we've already sent 2 or 3 messages or API calls right there. Before you've even paid any money. You could sit there all day on Amazon just adding in these cards, and they will just go and do this for you. So by the time you do actually have to go and make a payment, it's already there, it's already authenticated, so you know that payment's going to work and it's going to transact. But there's a huge amount of work that Amazon's had to put in order to sort of route all of those transactions, manage all the routing of those transactions, etc. Sorry, I have a US wife. I say route now. It's one of these things whereby there's a hell of a lot of stuff that's had to take place in order to make that frictionless payment.
And what you see as a user is the buy now button that you click.
Yeah, exactly. And it's great.
The next day the package shows up. But as you say, the insane amount of complexity that leads into this little simple button is just
and this is
marvel.
Really why innovation, where the idea is generally just the start, and even having NFC and everything that we've discussed today is and the iPhone itself, etc., is really just the start of something that needs to be filled into, improved, for us to have those Amazon experiences like we have today.
Yeah. And so Jake, we're going to start rounding off a little bit here, but 2 final questions for you. Talk more about PayModum and the work that you guys do on a day-to-day basis. What's the company about?
Yeah, absolutely.
You guys?
So PayModum, it was actually originally called Rubik's Tech. I'm going to tell a fun story now. So
Please.
we were called Rubik's Tech, and then we got sued by the Rubik's Cube owner, which is really funny. Right?
And I told you, if you can just solve the Rubik's Cube, you can keep the name.
And the irony was, if we were incorporated in Europe, we would have been all right. So no, the business started sort of 4 years ago. We have sort of our sort of approach to payment is really similar to what we've really been discussing today. We have 250 plus payment methods. We've just launched our own technology, so we're fully PCI, DSS, level 1 compliant. It's completely proprietary, so we host it all ourselves. We built everything ourselves. So through a single integration, you can obviously plug into all of these options, all of these methods. So we are predominantly working with a lot of the gaming guys, certainly where we're sort of adding the most value to the gaming guys is really sort of when they're thinking about something globally. So we have the best conversations when we're sat down with, say, I don't know, a Bet365 or somebody, and they say, well, we want to go into X market. And, you know, we have the knowledge of being able to say, okay, cool. So if you're going into this market, you know, there are obviously preference types to payment methods. And we have an understanding of what works straight off the bat in terms of sort of conversion, and in terms of sort of where that conversion can be generated from, and even down to the actual experiences of how these payment methods are sort of integrated. So, you know, the biggest sort of thing we have, certainly with merchants, is there is constantly an ongoing back and forth of the merchants saying, I want it this way. And we say, okay, great. It actually works better this way. So you're almost having to sort of talk somebody through, you know, again, we've gone into all sorts of different things. You almost have to talk somebody through your own mindset as to why you think something's going to be better, because you're looking to reduce friction, right? Generally speaking, but you're also looking to increase sort of conversion. You know, how are we going to optimize this in a way that, you know, we can get a higher deposit size in the case of the online gaming vertical. How are we also going to think about this? How does this work for your payout team? How does this translate to them? Where does this fit with them? You know, so there are all of these questions that we at sort of PayModum ask ourselves literally every hour, every call we do when we're speaking to the customers and providing that product. What we want to do in the next 5 years is that we obviously want to get licensed. So right now we're sort of leveraging obviously our own platform, but all of the banks that we work with, and thank you guys. Great work with everyone that we work with. You know, we've been, you know, using their banks, etc. You know, what we want to start building out is obviously, you know, our own banks. We're going to be opening in the US soon, so we're going to be incorporating there. We've got quite a few exciting things that we think we're going to be able to bring to the US market. We're obviously in the UK. We're incorporated in Malta as well. So yeah, we are, you know, looking to sort of grow. We've been growing very organically, as I was sort of telling you to start with. We have not taken or gone down sort of the private equity route or the venture capital route for a number of different reasons, which has made the lessons even tougher when we have made mistakes. So we've been burnt. But
you sleep. You get an extra 1 hour of sleep per night at least without any visits on the cap table. That's what they say.
Yeah, that's true. Yeah, there's like, what was it? In Masato, we actually so there's two businesses, PayModum and Masato. In Masato, there's 5 shareholders now because we've had our CPO just join us, and he's become part of it as well. And you know, one of the guys that we have on our, you know, one of the founders that we have in our team, you know, he runs 3, 4, 5 other businesses, and he was showing me what a board meeting actually looked like the other day. Scary. Not for me.
We prefer sitting here talking about the Second World War. Yeah. They can run the board meeting.
Yeah.
Brilliant, my friend. And final question for you. So where do you see the company in 3 years' time? What are you trying to achieve?
Yeah, absolutely. Well, because 1 and 2 are not the same with PayModum and Masato. I think Masato, that it's a singular goal, and it's really to reduce and remove all of that frustration that people have with enabling new payment methods. You know, making it code free for the end user who's using the platform, and doing it in a way that's, as easy as it should be for actually making a transaction or making a payment. And that's where payments needs to get to in order to grow, scale, and be able to, move faster and be able to then enable newer payment methods, which is ultimately going to increase the overall sort of innovation of the space, by, partnering with our platform. So yeah, that's what we want to continue to work on. We have our press release that's going out on the 28th for everyone listening, with the Payments Association. So you'll be able to access Masato from the 20th of February moving forwards. PayModum, it's all the fun and legal stuff that we're going to be going through with sort of license application, continue to build and grow, sort of not just customers, but really sort of the partners are as key to our business as anybody else. It's very important for us to, strongly maintain those relationships, continue to improve them, and continue to build and grow. It's pretty simple, really. Yeah.
Jake, this has been a fantastic roller coaster today across many topics and domains. It's an absolute pleasure to have you on here. I'm very happy that we managed to do it in the end. Thanks so much, Jake.
Thanks, Pierre.